open the floor to questions. So we are into this business of manufacturing products that are there in transmitting electricity from place of generation to the place of distribution. Our products are conductivity products, and therefore it helps into this particular transmission. We broadly have three divisions: the conductor division, cable division, and the oil division. Our turnover last year was about 14,000 crores. About 50% came from the conductor division. About 20-22% was in cable, and close to about 30% was from the oil division. About 50% of the products we export. So the company as a whole, and almost pretty much similar ratio we have for each of the divisions. We have manufacturing facilities in Mumbai, New Mumbai, Silvassa, Gujarat, Orissa, and in the Middle East. Currently, broadly, the macro environment is conducive in the current space, as we see. Is a lot of impetus been happening on renewable forms of energy, solar and wind. A lot of government initiatives is happening, especially in India. If you see schemes like RDSS schemes are there, which improves electricity for the last mile distribution. Public transportation in terms of mobility, rail infrastructure is getting increased, expanded, and all these are conducive to the kind of products that business that we are actually in. Plus, a lot of geopolitical situations are also favorable to us. Things like China Plus One is favoring companies in India and industries like us in particular. The Russia-Ukraine war happening with European Union wanting to looking at other alternative forms of energy is also helping us. So a combination of macro environment and geopolitical is actually giving us a lot of benefits that we have seen in the last year and seeing in the foreseeable future also. Broadly, what has played for us clearly is our focus on premiumization. We've been coming with premium products, especially in the conductor division, in the cable divisions, and few in terms of oil division as well. As a strategy, we have improved the profitability in the conductor division to make it much more profitability than what it was 3-4 years ago. Also, a strategy on globalization has helped. Earlier we used to be about 25-30% of our export ratio. Now it has inched almost to 50%. We are able to tap the opportunities that is available in the global space over there. And also in terms of innovation, also because we have been constantly innovating new and much more improved products than what is available in the market. We are able to look at the requirements and understand the requirements of the customer and then devise various products, especially in conductors and in cables. We are almost the first movers in terms of getting into the solar and the wind segment of renewable thing. And as we speak, we continue to look at innovation. We plan things we actually plan much in advance of the products that are going to come to the market, and that's where our tagline is also tomorrow's solution today. It fits into that. So a combination of this premiumization, globalization, innovation has really played the cards very well for us in the last year, and we see it's a kind of a journey with macro environment and geopolitical also supporting us, and with the internal strategy that we are following, this puts us in a good position for a business in the medium to long term perspective. Overall, our conductor division has turned completely high profitable because, as I said, it's a combination of premiumization and exports. Cable division also is running at a very high growth rates. Oil division has been also maintaining the volume and profitability, and with that we saw very good exponential rise in the financial 23 numbers. This is a very brief background, but if there are any questions or any clarifications you need, I'm open to answer that.
Conductor side also, like the high voltage to low voltage actually, and apart from that there is HVDC cable. So conductor is used and there HVDC actually, because both can carry the 1200 kV kind of thing.
Yeah, so the applications are different. It depends on what this requirements of the customers are there in terms of putting an application. So we are into this conventional conductors and Also in this HTLS, which is high transmission, low sag conductors, copper conductors for railways, and also in our OPGW. So that's the space where we are. And the properties are different across different. There are close to about more than 200, 300 different types of conductors within that. So these are overall bucket of conductorization that happens. So what happens basically very briefly, from the place of generation to the place of distribution, the application of conductors and cables are different. You actually use conductors, you use cables, you also use oil from the entire journey of the place of generation to distribution. To give a simple example, if there are these solar cables which are there, they actually generate where the sun is strong there. But that power has to be then transmitted to, let's say, office or industries or place of residence or place of use. That's where the application of conductors, cables, and in many places oil also, because you need to step up and step down the voltage level, because it passes through your substations and various junction boxes and various places there. So it's the application of the conductors and cables that actually determines that where different products actually fit. And all these are actually done by these EPC players who actually put this. We just supply the conductors to them. We have a very small EPC in India which takes us reconducting, but by and large we end up supplying the products.
Do we have capability to manufacture HVDC cable?
Yes, we have.
Are we manufacturing?
Yeah, I'm not too sure about this specific HVDC type. I'll let you check and get back to you.
And now what is the mixture in terms of export and within conductors?
Export would be about close to 45 to 50%.
And which countries mainly?
It's spread out. We supply in US, it's there in Africa, it's there in Australia. But yeah, US will be the large proportion.
So this margin expansion moving to almost 35,000 per ton, I think almost even touch 50, right? From earlier history of 15,000, and we are still guiding around 15. So just in this premiumization and export, how the exports are high margin, can you just give a view on that?
So, two reasons happen. One is premiumization of the conductor portfolio with, conventional conductors getting into the premium conductors. And which all this I talked about HTLS, copper and OPGW, that's a premium conductor. The second thing is that FY23, the export of conductors, the standard conductors, were very high margin than what we get in India. And the reason is that, because of, as we said, the strong demand push that is happening in the overseas conductors, getting into renewable space, more transmission line getting added. You see Inflation Reduction Act being signed in countries like US. The requirements of conductor is much higher than what it was earlier. Plus, due to pent-up COVID demand, people wanting to fill up their warehouses. And due to supply chain inefficiencies, they wanted to ensure that they have stock ready over there. So there was an element of very high margins that we got in FY23, definitely, which we don't expect to be sustainable at that particular level. We also reached somewhere about 58,000 per metric ton. We don't expect that level to reach there. But what we expect is that because our mix of the product has changed, we are still guiding at 25,000 plus tailwinds, because tailwinds could come from all this macro environment and geopolitical thing that we talked about. In terms of this requirement is going to go up and renewable thing is going to go up. So we'll actually need more and more conductivity properties needed. Plus, because of China plus one, countries like India would be favorable. So the base premium which used to go 8 to 10,000 2-3 years before has definitely gone up to 25,000. On top of it, we expect tailwind to happen depending on various macro and geopolitical.
And China is a big supplier for these US.
China is there. It's still there, but then they also want to gradually bring it down. So you can't just switch off China overnight, but it has to be over a period of time. And that's where we see volumes going up for rest of the China.
So this 5-year CAGR we are from 21% for this conductor business. So next 2-3 years, if you say with these tailwinds.
So what we expect in terms of conductor volume growth, we expect about 10 to 15% is what the number we have been guiding. 21% maybe I'm sure it's in value CAGR. Yeah. But better to look at volume numbers in conductor, because value depends on the price of aluminum also. So we only look at volume numbers and EBITDA per metric ton. So volume CAGR, we look at the next few years about 10% is a number that we are guiding.
And the capacity expansion for that?
That happens, debottlenecking and capacity expansion happens before that. So we have sufficient capacity for FY24, and before FY25 we'll be putting up more capacity.
Who are the global competitors for this?
So there are companies in, so one, there is Sterlite Power who are there in India. Then there is a company in Middle East, I think Medal Cables, they also supply, and I think there are companies in US, I think Southwire companies also supplying. But not too many companies are there in the conductor thing. There's far more organized than other products.
The top 3-4 have how much market share?
So we are the largest in terms of alloy manufacturers of aluminum alloy, and I don't have the exact numbers of Medal Cables and the Southwire exactly how much would be their share.
Since expanding capacity is not so much of an issue in terms of cost per time, a lot of these margins can actually go back a lot more than we think. Is there a risk like that the EBITDA per ton can?
So that's what we have actually reset our base margin to 25,000. So which if you see used to be the 8 to 10,000 earlier.
That's what I'm saying. Since it's not so difficult to put capex and expand capacity, is there a risk that 25,000 again goes back to?
No, so because this 25,000 is coming from a premiumization product, for which there are not too many organized players there. If you look at, we have some slide in our corporate presentation which actually talks about the competitive advantage of this conductor. It is there in our corporate presentation. It is there in slide here. It's in slide 5. But this actually talks about what are the competitive advantages that we have from the premium products as well as the conventional products which are export. So if you look at conventional products which are we export, the customers are looking at criteria of having a reputed supplier there. They want people who are reputed, who have good capacity in place. They have a very good risk management framework in place. So there are a lot of unorganized players who do not hedge this aluminum and metal, and then they are not able to deliver the products on time. So these customers who are there in export market, they don't only look at price. Price is just one criteria, but they also look at quality, reputation, reliability, risk. People who have strong risk management appetite. That's where companies like us stand out, and are able to differentiate as compared to unorganized players. Of course, there will always be competition with the organized player, but that's far more limited than that. Then if you look at some of the premium product that we are doing, it's not so easy for any other company to replicate that, because it's not only the supply of the product, it's also the designing of the product. The product should be there in the towers. Our actually conductors are there in the towers which are there. So you cannot have a product there and then because of high transmission, the tower itself collapses. So it's not only supply of the product, it is also the designing of the product to suit the particular infrastructure which is there. This particular stringing mechanism that is needed over there. This is an ecosystem of labors that needs to string over there. Sometimes your conductors goes over railway lines, over mountainous terrains, etc., which are very difficult to do. So this is what it's not so easy for some other local player to just copy and replicate that. And hardly there are competition here in the Indian market when it comes to premium products. So that's where we feel that our baseline, which used to be 8 to 10,000, that was a time when we used to manufacture only conventional products. Largely it was conventional products, and that competition has just gone up a lot. It's commoditized now. Now in the premium segment we are coming. That's where our base margin we are increasing to 25.
How do you define a premium product in quantitative terms? Is it like
so in terms of the product characteristics, like HTLS, this high transmission low sag, where you can actually carry very high transmission and still the conductors would be on top. It will not sag down. Like if it sag down, then it will hit all the vehicles and the people moving down. So that conductivity property is a very unique and differentiated product that has to be done. Then you have this copper conductors that goes to railways. It is also very unique and differentiated. OPGW that we supply. So currently we have these three baskets that we call as a.
What proportion is premium right now?
About 40%. Or 40-45%. And largely this premium takes care in my domestic market. The standard products which are there, the rest 50%, that we are exporting, and therefore the entire conductor division profitability has gone so high. So now you are selling premium products in the domestic market, and the non-premium products you are exporting, and then that
in
also
export the premium products don't have scope.
It has scope, but currently even the standard products are have that margin, because when you design the line, you can design the line even with the standard product. Premium products are also there, but you can design the product with a standard line. There, as I said, it's not only price, it's price, quality, reputation, reliability, risk management, for which customers are able to pay a premium than the standard.
So I was looking at your financials the past 10-12 years. What has really changed from FY19, let's say? Okay, the period between FY10 to FY19, the period from 19 to let's say 20, 19, 20, and then things have suddenly gone through the roof in 21, 22, and 23. Can you just walk us through what has really changed? Your margins were pretty volatile. Now you've got a top line growth and margins also being there, like almost about 20% plus. So what really transpired out of it?
So basically, there's just, if I had to sum up all the things that has happened, I will just bucket into three things which I was mentioning. One is clearly premiumization, second is globalization, and third is, innovation. These three things actually sum up. And just to give a few examples, in premiumization, you saw our conductor, business division, getting back margins which were never there earlier, because we have actually premiumized the products there. So we were there in the conventional space, and way back the management realized that if that's going to be the future, the conventional thing, the competition is going to be intense. And then unorganized players could be there, and there is no preference to organized players, and the same product can be manufactured by any supplier there. So we premiumized our product, and therefore we kept competition at the bay, and we are able to command a much higher. We are able to penetrate a market which was not there. In fact, we are able to supply products which are suitable for the market there. And that has really helped us from the conductor division there. Similarly, if you look at our cable division, we are able to premiumize and innovate in terms of venturing to solar space and going to wind space. Very few players are there in the wind market in India. And if you see renewables, we are the largest manufacturer of renewables cables in India. So innovation has paved way here, and globalization, yes, because during COVID time, we took a lot of all these UL approvals, and we have the largest number of UL approvals as compared to any other company in India. And we are able to tap the opportunities coming up in the US market. With that, FY23, we are the number one exporter of cables and wires in FY23. So, the combination of your premium products going into it, the combination of globalization that we are seeing there, 50% of the exports comes from overseas, which used to be about 30-35%, in earlier periods. Innovative products that is coming up. All this, combination has helped. Plus, you see, the macros are also supporting. The industry is growing with a lot of thrust on renewables, a lot of thrust on, transmission lines. You see metro lines going up. EV is going up. So the requirements on one side is increasing, plus within Apar we are able to see, keep, your infrastructure ready to meet the requirements for the next years. Like, the work on premiumization of conductors started way back in mid-2005. And for the product to develop, to be able to hit the market, because if you see, we have given a transformation journey of a conductor division in the forward presentation, where we're starting from what has happened in the last decade. So the premium conductors was visualized way back in 2005, when the market was not even there, and it took us time to develop that product, and finally in 2014 we launched it, and now we are seeing continuous momentum there. So, and that's where the tagline of Apar, tomorrow's solutions today, wherein we are able to look at what could be the solution for tomorrow and how we build it today. So theme of premiumization, globalization, innovation has actually, changed what Apar was, 10 years earlier than now.
So in this specialty oils, this other division, just on that, can you give a brief what is the mix there and how the volatility of margins and all will be different?
The specialty oils, about 1/3 goes into transformer oil. About 15 to 20% would be auto lubricants and industrial lubricants. Another maybe a third, maybe white oils. And then we also have rubber process oil. We have some process oils, etc. There the margins are volatile because oil cannot be hedged. We buy oil on contract in some cases. Sometimes we buy on spot, and the selling prices change depending on how crude changes. So till the time depends. Profitability will depend on the selling price prevailing in the market and your inventory cost. If you are holding inventory cost at a higher rate, then you will see actually margins coming down till the time that inventory gets liquidated. So if you see last FY23, our margins swing from 9,000 in first quarter to 4,500 to 1,600 in third quarter, and again back to 3,500. So we look at a 12-month margin per KL rather than looking at a quarter number. So we are still guiding about 5,000 to 6,000 per KL as a sustainable margin going forward.
It's more like conversion, time for conversion from crude purchase to
blending. Yes, yeah. We do blending.
What is the ratio for premium and regular products?
For conductors?
Yes.
Premium products would be about 40-45%.
And what is the ratio of, percentage of government orders, government or PSUs?
So we have one slide that actually talks about where we are actually selling. It's also there in our investor presentation. Customer mix. If you see this here is slide 12, but it's the same thing that we have in the corporate presentation. This is a mix of the products that we have. So export is close to 50%. We have some industries and corporate, which is largely cosmetics, pharma, rubber, where 16-17% of the Apar products go. And there are very specific industry groups like rail, defense, shipping, mining, telecom, where about 8-9% of the products goes. And there are OEMs, transformer OEMs, etc., where about 7% goes. Then there are these transmission companies in EPC and utilities, where about 5 plus 7, 12% of the product goes. These are transmission companies, again different than the electricity board. These are pure transmission companies which are there. Renewables, largely the domestic section, about 3% goes. And the electricity distribution board, which is the state-run distribution board, there is about 1.6% goes, and then there are a few others.
Generally in exports, how does it work? Do you have distributors or you directly sell it to the client?
Both distributors and EPC, both we have.
In many new countries, which will be adding to the.
It's an evolving number.
Because renewable as such is.
Yeah, so it's already we are at 140 plus one countries plus, and then it's an evolving number. So we were not restricted to any particular geography.
In general, is there a margin difference between export?
There is a margin difference because, as I said, people export, they not only looks at price, but various other things, quality, durability, mainly risk management, appetite, all those things.
So better margin.
Better margin, even for the products that is low margin in India. The standard products has a better margin.
And within the regions also, is there a difference? Africa to North America?
It actually, so last year it all depend on the various requirements, like the urgency, to get the product there. So the price was different, but going forward it depend on their requirements and things. So it's and also depend on the type of products they need. Like cable would be some 1,000 products which are there. So depending on application specific products, things would be.
Any thoughts on railway opportunity?
Sorry?
How big is the railway opportunity?
So railway opportunity is quite big, and we have been already supplying a lot of cables for electrification of railways that has happened already. Plus we also see things like your metros coming up now. We see Vande Bharat, new forms of train coming. We are almost supplying more than 90% of all the cables that goes into Vande Bharat trains. Then you will see high bullet trains coming up, freight corridors, etc. coming up. So this, and we would have already seen in this union budget the spend that is happening on railway infrastructure, station upgrades. So everywhere we will see actually the requirement of cables and conductors will be there at different times, and also from where the source to distribution we will see that thing. So opportunity we are seeing in the railways as well.
And how about the defense? You've mentioned defense as well, right?
Yeah, so we supply to multiple industries. Rail, you're saying we have defense, we have shipping, we have mining, auto cables are there. So
So you supply to which all companies in defense?
So for defense, all these defense companies they supply.
So globally, what percentage of market share Chinese companies would have? Is there any data on that?
We don't seem to be having that data. What kind of, but you can actually look at US imports. Possibly, if that data is there, you come to know from where they import actually.
Who are the big Chinese conductor and cable companies? Are there some names who are listed or something?
Not sure about the names. I'm sure there will be plenty, but specific names I'm not aware.
The cable business, the retailization, we're trying to enter with the brand. I think we have a brand in the cable in the housing wire side. And how is the strategy next year? Because that's a growing space.
Yes, so that's a very unique strategy we have to improve the light duty cable. So we were largely in 2 states, even by FY2021, largely in Kerala and Gujarat. Now we are exploring in more than 13 states, and we are going to few more states in this year. We are actually creating a channel of distributors and retailers, and trying to increase our share of presence there. Again, we have a very unique and differentiated product, which is powered by E-beam technology, which is able to carry 50% more current than some of the other products that are available in the market, which means that it is much more short circuit resistance. It is melt resistance. These things actually are a very differentiated product, and that is the USP that we are having, and that's what we are actually demonstrating to influencers like electricians. And once they are able to see this difference, the success ratio of people buying Apar Anushakti cable is much high than, because once you put wiring inside your house, you don't want to again redo your house. So if you are able to get this protection, safety is very important to household. So this E-beam cables has a unique property of having 50% more current than some of the other cables in the market. So that's the USP we have. And then, as you said, we have this brand ambassador. So we are very focused on that particular segment of the business, and we are actually targeting some about 500 odd crores by FY26. Currently, it's about 175 crore last year. Retail.
Look, will be competing with Polycab KA.
Yeah. Correct.
So it will still be 500 will be like low hanging fruit only in housing wire side. And the remaining cables is what now mostly exports and
domestic, yeah.
Low tension, high tension.
Yes, up to 66 kV.
Okay. That is B2B.
Yeah, we do.
Any plans for capex?
Capex, our target is about 400 crores in the next 12 to 18 months. 2/3 will be in cable division, about 25% would be in conductor, and very few capex will lead in oil division. There could be some maintenance capex.
So adding to his question about the railways this year, so if we see railways as one revenue source, what is your guidance like if you just consider orders from the railways and PSUs in general? What is your guidance like if we see only that, because railways has a huge opportunity because it has just started, as you rightly said, there are many new trains are coming up. So already you have capitalized, like you were saying, you have put conductors and new cables. So in terms of, can you give some light in terms of numbers, like how much only railways contribute to your?
So we don't give specific, industry-wise numbers. We don't give that. But if you see, the opportunity would be there, as you see, as you're seeing all this, trains coming up, bullet trains coming up, Vande Bharat coming out. But we don't give out specific industry-specific numbers.
Any ballpark figure?
As a number. Because what happens, some of this is also order specific. Okay. So we may have one number now, number could be different, and then these things grow disproportionately, whether on the lower side or on the higher side.
In the transformer and specialty oil space which you are dealing, what is your share in the transformer oil in this?
Transformer oil will be about 40.
I think you will be the leader. I think.
Yeah, we will be the leader. We will be the leader. About 40-45% will be our share in transformers. Sorry?
Transformer oil. Now you've got some transformer oils that don't need this lubrication or something like that?
No, all transformers will need lubrication. It's like coolant working in there. The transformer will need that lubrication.
Who are the big competitors globally for the business?
So we have this globally. We have this Inas as a competitor. In India, we have Savita and Raj and different companies.
What are all the new geographies you are maybe?
We are already present in 140 geographies. So we are just expanding.
But last 1 or 2 years, which regions have done better?
Last year, if you see, cable has gone inroads a lot into US. That's clearly a different. And therefore, you see cable business, I think, was some 1,200 crore in FY21, going to 2,000 crore in FY22, going to 3,200 in FY23. That shift has happened largely because export has exponentially grown, and that's what I said. During COVID time, we took all these UL approvals and tapped the opportunity available there. So
let's say cables in US would have grown at what rate?
We were hardly present there till second half of FY22. Second half, I believe, H2 of FY22 is where it started happening. Before that, we were hardly present in the cable sale. And most of
what's the run rate now, like quarter?
So it's US. We will be what about 65-70% of our exports of cable would be from US.
1,500 crore would be exports. That's 3,200 crore is the.
So out of that 1,500 export, and out of that 65 would be what is
1,000 crore.
It could be like a pent up, right? Suddenly renewable cable.
So pent up, but this pent up, and we expect to continue also because renewable push has just started.
Okay.
This is not a pent up that we expect to come down.
Like replacing China mentioned.
Yeah, that's what has been happening. Plus, so one is that is happening. The second thing is that the overall demand is growing. We have never seen this kind of renewable push happening earlier. Solar, wind installation, we've never seen that happening up. And as I said, US transmission lines redoing has to be done. Infrastructure, Inflation Reduction Act talks about infrastructure spending there. So this kind of push has never happened in the past. Plus, you add all these geopolitical things, China plus one and all. Right?
So let's say cables when you're supplying to a utility in US, do you see Indian competitors like Cheye, Polycab, or you see mostly Russian?
We have Indians also, locals also.
But Chinese you are not seeing too much.
It's there, but we are seeing gradual reduction. Also, the duty differential between India and China being there. So, you see a gradual reduction.
So, US has put additional duty.
So, and number in US actually, what kind of investment they are doing on the transmission for the conductor, cable, etc. And what kind of opportunity we can expect to.
So there are a lot of data available on spends, like global spends on renewables. It's there in public forum, and this we don't have the exact number as of now. I don't have, but there's all this kind of how much gigawatt of solar and wind they want to do, how much percentage of electricity to come from renewable is there in various electricity circulars and forums.
So renewable side, that is actually, I'm talking about the transmission.
Transmission lines, as of now, I don't have it handy here, how much they want to do, but the their transmission line is the old ones which are there, and and all the
upgradation, whatever.
upgradation there, and in reduction act that they talked about, that's the only thing which is there.
So in India, incrementally, is the transmission cable slowing?
It's increasing, not slowing. If you see all things, so many initiatives are being there. The RDSS schemes are there to improve the connectivity for distribution. Then you have public transportation going up. Electric vehicles are there. You need to create infrastructure for metros happening everywhere. High-speed trains are happening. So this actually.
Power grid cables is not going down.
Sorry?
Power grid cables.
So power grid is there now. It's all distributed across various states. So each state transmission companies also have role to play.
So cable business, the third one, what will be the growth target overall level?
Looking at about 25% growth rate in cable.
That should be the fastest.
Yes.
This is value.
Value growth.
Conductors will be 10% volume growth, and oil will be
5%.
Kind of.
So this 25% CAGR is for how many years? University.
We feel that for foreseeable future, it is that we feel a long runway would be there. Exactly number of years we won't be able to say, but clearly we see for the foreseeable future we are able to get this 25% growth.
So at least 4 to 5 years we can maintain.
And will the export to domestic and cables change a lot, you think? Or
the mix will change. So we look at where the per unit margin is high. Per unit margin is high in exports, and accordingly capacity will get diverted there. It depends on where the profitability is.
But demand is there both sides.
Demand will be there both sides. So that's why we are also doing capex to increase our capacity, and to optimally utilize our capacity, we see where the per unit margin will be high.
At this point, exports are better.
Yeah, but even domestic market are also there. So I find a lot of this, renewable thing, the domestic margins are good. So we also do domestic cables there. It's just that where the product is commoditized, that's where the margins in domestic is less, and that's where commands a significant part in. Like we talked about these conventional conductors, which is so commoditized, your margins in India is less, but the same product overseas is a much higher margin.
In general, the conductors and cables required for a renewable project are they more higher end than a thermal project?
The intensity is high there because you need different types of cables for the panels, and then from the panel to bring it down. And similarly, in the turbine, the turbine that moves around is there, and there's a tower cable. So there's a lot of intensity of cable application overall, which is higher than the thermal.
Cable then for transmission, both opportunities will be there.
Yeah, and then that has to then transmit to the place of distribution. So you need conductors there, you need again transformers. So, and if you see our portfolio, it's all about conductors, cables, and oil is 1/3 is transformer oil. We fit into that basket where this flow of electricity is needed.
In balance sheet is net debt or net cash? I think not much.
We don't have debt too much on our books. Yeah, it's very less, very low debt.
And the working capital cycle of this whole export and all?
So export, yeah, is a bit high, but overall we have about 40-45 days of working capital, net working capital.
Thank you, sir.
Okay, thank you so much.
One more on this, not on your company, but a lot of expansion is happening with the mid-side and EHV side. Any idea on that industry? Universal cables and all. I'm not talking about because of this whole growth story.
Because of all this macro thing, we're going to be there for all then. This is not Usually only to Apar, the macro environment and geo is there for all the cable companies. Okay, thank you. Something or we can please, if you have any questions, we can start.
If you can just give a
brief introduction, please. Sure. Start. So, Apar Industries, we are in the business of manufacturing the products that cater to electricity transmission. Transmission from the place of generation to place of distribution. So power is generated at a particular place, it gets utilized at another place, and there are products that are involved into this transmission. So we make products that help transmit electricity from the place of generation to place of distribution. We basically have conductors, cables, and oils, and our turnover last year was about 14,000 crore. 50% came from conductors, about 20 to 22% came from cables, about 30% from oil. We have about 50% coming from export business, and we have manufacturing facilities in Mumbai, in Silvassa, in Middle East, Gujarat, and also in Odisha. Certain macro environment things that is conducive to our industry basically is that there's a lot of thrust you see in the renewables front, with solar and wind energy picking up, and this forms of energy calls for lot of products, and intensity of products is much higher than earlier. Globally also there is a lot of thrust on infrastructure spending happening. Different countries have spending more on public transportation, on infrastructure building, transmission lines developing, which acts as a benefit to our industries. Government in India, there's a lot of schemes coming up. We have this RDSS schemes to improve last mile connectivity and strengthening the distribution network in the power sector. Electrification of railways is happening in a big way in India. At the same time, we have public transportation and mobility. So all these spaces are conducive to our industry. Some of the geopolitical things are also favoring us in terms of China plus one happening, which is clearly an advantage for countries in India and also our industry and our business in particular.
Is that helping in key export markets?
It is helping us. It is helping us definitely, because countries are looking at alternative vendors to China. So in some of the countries like US, the duty structure in China, import duty in China is much higher than in the rest of the cases. You have this Russia-Ukraine war, wherein Europe is looking at alternative forms of energy going into renewable things. So some of these geopolitical things plus macro environment are conducive. At the same time, within Apar, a lot of internally, we have also positioned ourselves to tap the opportunities available, largely into premiumization. So our products we have premiumized a lot, especially if you look at the conductor division. What used to be just the conventional conductors a few years ago, 40% of the business come from premium conductors, which have a much higher margin than the standard conductors. We have ventured into solar and wind cables when it comes to the cable division. These elastomeric cables have a much higher margin than the normal power cables. We also looked at globalization, where our export mix, which was about 25-30% earlier, now has reached almost about 50%. We have a lot of approvals from countries like US who have very stringent audit mechanism to grant approvals. So globalization premium has helped us. In addition, innovation also is a very core to us. We ventured into a lot of innovative products in the conductors, in the cable division, also in the oil division, wherein this renewables, as we talked about, that's growing space there. So within Apar, if you see a lot of premiumization, globalization, innovation has been happening. Macro environment is conducive, and also a lot of geopolitical situations are favoring us. So, combination of all these things has acted very well for us in last financial year FY23, and of course we feel that some of these things will definitely continue as we progress in the future. Now some of it could be that could diminish. Like for instance, last year people were willing to pay a higher price and our margins was very high because customers in the US wanted to stock up their warehouses. So they were willing to pay a high price for the product. The freight rates were abnormal. Some of those things may not continue, but a lot of macro, geopolitical and internally what changes we have done in Apar are likely to continue as we see this business.
On export side, are you seeing any sort of slowdown given what's happening in Europe and the US?
So basically, the slowdown we are seeing, but it's going to be momentarily. It's just going to be for a quarter or two. Because last year what had happened is that due to pent-up COVID demand, a lot of customers were stocking much higher. And you all know there was a supply chain issues last year where the freight rates went 10 times higher. So people wanted to keep the stock in their warehouse. So they were willing to pay a much higher price for the products to be delivered at their warehouse last year. Now with all this COVID things settling down and with freight rates normalizing, we suddenly found that the inventory levels are high. So that's where the de-inventorization is happening, and it's true across many other sectors. Of course, you may also be reading this, and it's true for the many sectors, and it's something that we expect maybe a quarter or two of phenomenon, wherein margins may get neutralized, and we may have some de-inventorization impact of that. But on long term, things looks quite positive for our industry with these developments happening.
So the US and Europe, for example, if rates going up and the economy is potentially slowing, you're not seeing slowdown in order on the back of that, but in the restocking?
Not on that. We are only looking at de-inventorizing because the economy and they have a very strong push on infrastructure space. So US. They are passing this Inflation Reduction Act, talks about infrastructure spending there. Also, Europe, post this Russia war, they wanted to have an alternate form of energy. So now they are pushing very strong on renewables. So these are the areas that we see, the focus is going to be there. It's just the impact of inventorization is what we feel that maybe a couple or two quarters could be there. But otherwise, the positive side looks quite robust.
What's the makeup of renewables in all of this? I mean, we keep talking every month.
It's largely solar and wind.
No, but what kind of revenues will you now be generating from the renewable segment? I mean,
so if you look at cable exports, close to about 65-70% would be renewable out of the cable exports, and out of the cable domestic business, maybe about 20-22% should be renewable.
You spoke about the China presence, right? So how is it playing out? So can you give some detail on that?
It's playing out in terms of customers wanting an alternative vendors to China. So that's what largely is playing out, and countries like US, the duty structure, import duty structure from China to US for some categories of products in cable and conductor, the variation is as 15-20%. Same product imported from India as compared to the product that imported from China, the duty variation is as 15-20%. So that's what it's playing. Countries like Australia, where the duties in India was high as compared to China, now it's at the same level, 0% duty there. So that's how it's playing.
Duty differential is 0%.
Yeah, it's duty differential is 0 in Australia, but in US we have an advantageous position, about 15-20% duty.
So in one of the business verticals, oil one. So what has happened in the history so that the Indian companies have grown so fast rather than the let's say international companies? What has happened in the oil segment itself?
Which particular segment is in oil?
The oil vertical, yeah.
So oil vertical, if you see, our volumes has been about 5 to 8% a year. That's what it has grown.
What in the business change it has happened? What led to this growth?
So I think if you look at oil business, about 1/3 is transformer oil, and transformer oil is used in the transmission. So as you see more transmission lines coming up, more electrification coming up, you need transformers for stepping up and stepping down the voltage. So that's purely linear with the the transmission line that is coming. That's about 1/3 of the business. Apart from that, we also have industrial oil, we have process oil, which goes into various industries. So if your industrial output goes up, which is what we are seeing, various manufacturing industries, various tire manufacturing industries and other industries where machineries are involved, where you need a lot of metalworking fluids and all. So as your industrial productivity goes up, the requirement of these lubricants that goes into these machines will go up, and that's where you will see growth coming up.
So we are the consumer for these guys.
Yes. Right.
Recurring.
We are recurring, yes. Absolutely.
So you talk about sustainability of growth on that side. So say when you look at the petroleum jelly or the white oils, how should we think about growth there?
So for the oil segment itself, we are looking at a growth of about 5%, of which we feel that some of this transformer oil will be much higher than that, and some of it could be less, and it evens out about 5 to 6% growth.
I think one of the large players, Raj Oil, right? They had some significant disruption where a lot of share was lost. So I'm curious if you've been able to be beneficiaries of.
No, I'm not aware of that thing.
There's another company called Gandha, which is also in that space.
Yeah, there are many companies. A lot of companies are there. But I'm not aware of what you are specifically talking in terms of that.
I think context was that Raj was market leader when it came to white oils. And then they were acquired by a European major who couldn't manage the India piece. So then that business has shrunk. So I was wondering if you've seen tailwinds of Raj losing market share. Because it was a very sizable business, well over 2,000-3,000 crores.
Okay, so our business has been growing. So I don't know how much to attribute because of this fact or because of various others. We have been growing our business year on year.
White oils would be how much percent?
About a third of the total oil portfolio.
So we've been focusing on premiumization a lot, like what we have done in conductors. Any strategy for the oil segment?
Oil, we have a strategy for each vertical. Different verticals have different applications. So if you see transformer oil, also we have different grades. We have special grade and we have standard grade. Now some grades into power transformer, some grades in distribution transformer. So the margins are different there. So special grade is a premium product over there. So this has been there for quite some time. This is not suddenly. This has already been premiumized in the case of transformer oil. Then as the industrial oil, there is an array of products that goes into that. We supply oils to the rubber industry. There are process oils that goes into the cosmetic industries. Auto lubricants is a big area that we have. A lot of our engine oil. We have a license brand from ENI Italy to supply this ENI brand in India. The engine oils are there. We supply all this grease lubricants. So it's actually wide. And to a large extent, a lot of this premiumization that we are saying has already been done in that thing in the past.
So no strategy to push or scale up the lubricants side?
It's already natural. So now it's just about growing volumes and growing volumes profitably. So that's what we do for oil.
In the conductor space, can you just list out a few international competition?
International, I guess it would be this Midal cables from Bahrain.
It's in the conductor space.
Yeah. It's there in Bahrain, and in Southwire, they are in US. Used to be two big companies. Southwire.
And in terms of capacity, also they will be having more capacity than us, or we are the largest?
So we are the largest in terms of aluminum and alloy conductors. I don't know about their capacity, how much would be that relative to us.
Yeah. Last year also is very good year for you. Your top line jumped quite a bit, your margins jumped quite a bit. Do you attribute that primarily to very strong the export market where you said the stocking happened?
Yeah, no, so there are two things. So one thing is that, what has changed in last year is that if you look at largely been driven by the conductor division, where the portfolio has become premium and exports. So even earlier, the premium proportion was increasing. Last year, we also got opportunity to export at a much higher margin. So we sell the premium products in the Indian market, having a very good margin, about 40-45% of the products are premium. And the standard products we are actually selling in the export market. So the standard product selling in the export market is at a much higher margin, because overseas customers, they not only look at your price, but they also look at quality, they look at reliability, they look at whether the company has a good risk management appetite or not. So there are multiple things that they see there. And one part of it is also the stocking about that, but that's just one part of it. There is the other part about products being sold in the export market, standard products having a better margin there. So it's a combination of various things that has led to the FY23 being so high.
This one going with this is that traditionally your margins have been around 7% plus minus. Your EBITDA margins now in 9%. Is this sustainable going forward? Do you see it reverting back to 7%?
Yeah. So what we look at it is, when you look at these margins, we split into division wise. And for the conductors and oil, we measure it on a per unit basis. The reason being is that if you look at percentage to sales, the aluminum and copper price fluctuates, the oil price fluctuates, is a pass through for us. So then your ratios get distorted. If the aluminum price is increasing, the EBITDA constant, the percentage looks low. So if the price comes down, the EBITDA looks high. So typically we measure it on a per metric ton basis. So the per metric ton in conductors used to be about 8 to 10,000 per metric ton around 3-4 years ago. Now in FY23 it has reached to almost 44,000 per metric ton. And that is something in terms of guiding, we are guiding it could be 25,000 plus some of the tailwinds that we will get.
So if you can review the number again, what was it?
3-4 years ago it was about 8 to 10,000 per metric ton. Because of premiumization, because of export mix going up, in FY23 is as high as 44,000.
That's huge.
Yeah, so that's because the portfolio has got premium. So that's a big story, and we are talking all this in our corporate presentation, in our investor con calls. The big story is about that we are able to premiumize our conductor division, because of which it's so high as 44,000 per metric. Plus we also are exporting more. The standard products which are low margin in India, instead of selling in India, now we are exporting. So that is giving us a better margin.
So currently it is at 50%, right? Export.
Yes.
So how much you want to take to take?
So in terms of our strategy, we are looking at expanding the per unit margin. If the domestic market gives me as high as margin, we'll do that. So our focus is going to be on margin, not in terms of the mix of percentage. So whoever gives us the highest margin per unit, that's we prefer.
What's the differential in the export and domestic?
That's something is very difficult to give, because there are some 500 different products. And
conventional?
Even conventional, there will be long list of products, because it all made to order. So it depends on the design specification. There is no thumb rule in terms of what could be the margin for the domestic business and what could be the margin for the export business.
But export ideally will be?
It will be high, yes.
Any range?
As I said, it's difficult to give that.
If you were to look project 3 years online, last year you did 14,000 odd crores on top line. Do you see that growing by 15-20% or any internal targets that you can share?
So in the oil business, we are looking at a 5% volume growth. For the conductor division, we are looking at about 10% volume growth. In the cable business, we look at about 25% to 30% value growth.
So on overall, what do you think that will result?
So it will be a mix of this plus the aluminium price difference. So it depends on how the aluminium and oil price goes volatile. It will depend on that. Because that's something it's a pass through for us.
So the orders are actually with a pass through.
Yes, pass through, because we do 100% hedging of aluminium and copper. The moment we get an order, we do that hedging. So that price is fixed. We don't take any risk on aluminium and copper.
sir, could just list out the top three challenges which you are facing in your business?
I think right now the time is more about opportunities as we see. If you see all these macro opportunities, there are plenty. The thrust is on infrastructure spending, government schemes. It all looks positive as this thing. There aren't too many challenges. There could be momentary challenges in terms of this de-inventorizing, but that's also we expect to last about a quarter or two. Apart from that short-term thing, there doesn't seem to be any other challenge. Because we have done a long way to come out of those situations. As I said, if we did not do any premiumization in conductor, then possibly we would be at a situation where we have to worry about the competition and all. But here now, after this premiumization of the conductor division, we have created a separate market for us. Solar or cable division, we have a range of cables that we have. So we supply to solar, we supply to wind cables. You have this cable that goes to railways. You have this cables going to shipping, defense, mining industries. A lot of harnesses goes there. There's a lot of power cable supply. You have market in India, you have market in overseas. So the way we have diversified, premiumized and spread out, there is no single risk that we have across our product divisions.
Any capex plan in near future?
In the next 12 to 18 months, our capex will be about 400 crores, of which 2/3 will come from the cable division and 25% will come from the conductor division. There will be just minimal capex, maintenance capex in oil and some other maintenance.
Selling the cables in India?
Sorry?
Selling cables in India as well?
Yeah.
How much is export? How much is India?
50% is export.
50% export.
In oils, you also have a plant in Sharjah.
Yeah.
Is there a strategic reason for it for specific clients?
So it helps us in terms of cost of reaching to the customers. A lot of these Middle East countries, we get the products in Sharjah. So the freight differentials helps there. So in some cases, the freight from Sharjah to other places is much less than in India.
So you will be sourcing the oil from Aramco?
Yeah, and also US.
How do you source the oil from US for Sharjah? As in, you will have Aramco right there.
We import the oil. So it comes to India, it also can come there.
No, but they make their own oil, right? So why would you want to import from the US or in Saudi, right?
Actually, what we get is the base oil.
Got it. Aramco oil produces base
oil?
Yeah,
same. We get from Aramco also.
And then you process it and...
Yeah, we blend it. With our own, blending and additives, we do that thing.
Right. Why do oil companies not forward integrate into it?
Into what?
Using the base oil to... Because it's a single process, right?
Yeah. I am not sure about that. I can't answer about that. But, it depends on, what I understand is that it's a residue of, some form that comes and then it gets processed. But no, I'm not the right person to answer for that.
Right now, are you looking for any inorganic growth?
So it depends on our opportunity that now there's, nothing is on cards, but it all depends on how opportunities come down. But no, there's a lot we can do organically. If you see the kind of growth that we are seeing, there's plenty we can do organically. The kind of product advancement that we're doing, the kind of product tappings we're doing. It's all organic growth, and there are much more we see potential in the organic space itself.
You have the capacity, you have the...
Capacity we have, and we also invest behind capacity. So wherever we see strong orders coming, we invest. We invest ahead of time to be able to meet the capacity. Capacity will never be a constraint for us. We can always build capacity.
What are the utilization levels currently?
Cables would be about 85-90%, and similar would be in conductors. Oil, we don't have capacity constraint. We just work about 2 shifts, and we can always increase it by another 1 shift.
It's a very basic question. What's the difference between a conductor and electrical cable?
So conductor is, aluminium, So the the purpose of this conductor is to transmit electricity. So aluminum and copper are good conductivity. If the aluminum and copper is just aluminum and copper, that's called a conductor. But if you look at this wire that you see here, it has an insulation. So if the aluminum and copper is covered with an insulation material, then it's called a cable.
Okay.
So inside this, as you see here, you will have a copper. Or a
converter.
So that you can actually touch it, you can feel it. But with the conductors, you cannot have conductors here. You can't touch the conductors.
So you can convert a conductor into a
conductor plus an insulation becomes a cable. So conductors are typically overhead. You don't see conductors on the ground here without nobody should touch it. But cable you see everywhere, underground and in the office and everywhere. The conductor is actually a raw material for cable.
Right.
So in the cable segment, our B2C revenues would be how much?
It's about 175 crore in FY23, and we target to make it about 500 crore by FY26.
And are we making margins right now at these levels in the B2C segment?
We are making, but we are also investing behind a lot of BTL activities. A lot of manpower we are building up that. So margins is getting reinvested back into the business.
Right.
Because we were just about 2 states even a couple of years ago. Now we are expanding to 13 states. The channel we are improving. A separate team is looking at those things. We had the first advertisement in the Women's Premier League. Sono Sood is there as a brand ambassador. So the money is going back to build the brand, the channels, and the infrastructure space. It's going to be growing business every year.
And how has been the response so far?
Very good. So this product has a USP in terms of differentiators. It is actually an E-beam cable, so E-beam wire. So it has 50% more current carrying capacity than any of the other wires, and it's melt resistant. It is short circuit resistant. So that is what it's a premium benefit it has as compared to the other wires. So we are actually demonstrating this uniqueness to the electricians, and the people. The success rate of people buying is much higher when they actually see this.
This wire?
About 175 crore.
Unbelievable. Will be high margin?
Yeah, high margin, but then as I said, the margin is going to develop the brand itself, and BTL activities, and channel expansion, and this is going to fund the brand itself.
In one of the call, you stated there was slowdown in the conductor business in the export side. So is it only the export, in the conductor business, or as well as the cable business?
The conductor and cable, and that largely in the US. So we are seeing that US doing this destocking thing. It could be there for about a quarter or two, we expect. So it's been conductor and cable momentarily for a quarter or two.
Not more than that.
We don't anticipate more than that, because these have a huge spending there, and also possibly they may be expecting the interest rate to come down. They don't want to lock in at such a high interest rate which is there. So believe that by that time, they should be able to pick up further investments.
So for a company as a whole, can you just give geography-wise the export breakup? How much is US, how much is Europe, Australia?
The US would be a bigger portion of that. Almost, as I said, about 65% of our exports largely cable exports goes to US. In the case of conductors, would be about 25% of the total conductors would be in US. And we also sell in Bangladesh, and there is Australia is there. Specific numbers I don't have ready at the moment, but these are the large markets. And then the entire oil goes to Middle East and Africa, and there's 140 plus countries where we sell different grades of oil.
So incrementally also in the export growth will come from these geographies, or we are targeting?
Already 140 plus countries.
So is it one specific region like Europe or something?
It looks pan-global. If you see this infrastructure and these things are happening across the globe. US is there. You have a lot of metros coming up in Australia and Latin America. Europe will go into renewable things. So it's not going to be a country-specific phenomenon, nor is it going to be year-specific. It could be short-term mismatches sometime, but if you look at long term, it's going to be pan global and over a longer period of time. That's the runway that we see.
And the demand in the domestic market, so in the call, Kushal Bhai was quite bullish on that. So what is driving this?
Same thing. If you see, your lot of schemes are coming up. You have this RDSS scheme that is coming up in India. Then you have this public transportation mobility space going up. Railways getting so much spending thrust, which is there. Electric vehicles are there. You need so much conductivity, so much electrification thing. So transmission lines are setting up new cities. The requirement of electricity is much higher than what it can come. That's where all these premium conductors are helping us to get more supply of conductors into the city than what can conventional conductors. So if you look at this thing, the domestic demand is very robust. So if you see industries growing, so if the industrial output is more, your lubricant volume will go up. So, we are all talking about the per capita GDP increasing. With all this thing, your industries, manufacturing is going to grow up. You will see all the related products expanding. So domestic demand looks very robust at the moment.
And this HTLS cable, do you see export demand also picking up for this?
We can. So as of now, people are buying more standard conductors, but HTLS conductors also can be sold.
On the cable side, are you all competing with KEI and Polycab?
Yeah.
There is competitive intensity in the domestic market. So the high-end products, do we see competition out there also?
Competition is there, but for premium products, the competition is much less because it's not something that can be easily manufactured. You see, in our corporate presentation, again, some competitive advantages of this conductor. You would have seen this slide in the corporate presentation where for the premium products, what are the barriers to entry? For export products, also what are the barriers to it? So there would be competition from some of the good organized players, but not from the unorganized segment because there are a lot of competitive advantages that we see in all the three divisions that we operate.
If you could list one or two.
So if you see the export thing, where the customers are not only
competitors name
in India. Yeah, we have conductors. We have Sterlite Power is there. Then I have to talk about Medal Cables is there from Bahrain. And cables, you have all this. That you talk about. Oil also you talk named few things. Savita, Raj, and Gandhar, Panama. Minas is there globally.
Any guidance for next 2 or 3 years?
So guidance on oil is that we are looking at a volume growth of about 5%. Conductors, we are looking at volume growth of about 10%. Cables, in terms of value, we are looking at about 25% value growth.
So this is for the next 2 to 3 years, or?
Yeah, largely yes. That's what currently we are looking at for medium to long term.
On the renewable side, have you getting any orders from export?
It's all exports, largely exports. Almost out of the US exports, large proportion is into renewables only. 70-75% is renewables or the cable export to US.
So going forward next 3 to 4 years, what would be your top 3 priorities?
Top 3 priorities would be, the priorities that we just laid down, which is focusing on the premium products and improving the margin, because we feel that the market is
already a high margin.
Yeah, but it would be focused on that because what's going to happen is that you will see, the demand will be strong, but we don't want to focus where the margins are high. We don't want to get into places where the volumes are high but the margin is less. Secondly, to leverage our core strengths in this renewable space that we have a very strong wind manufacturing capabilities. That's something we'd like to push more. There are very less competition in the wind space currently, and the range of products is so wide that we want to improve our global space. Like US, we just ventured 1.5 years ago. So there's a lot more opportunities that will come by getting into newer markets and newer products there, and also synergy between the conductors and cables, because now we've seen that cable is also going to customers in US, conductors also going up, and in many places transformer oil will also go up. So we would like to create a synergy where cable is sent, whether there is an opportunity for the conductors, and therefore is there an opportunity for the transformer oil, because all these three are stitched and in linear proportion. So we can actually cross synergize our products. And
transformer oil, is that what percentage of your oil business transformer oil?
1/3. So that is where we would like to prioritize there. So even today we do that. Like if there is any significant order we are getting in one sector, that communication happens to the other divisions, so that we can then pitch for. But premiumization and innovation, of course, will continue. We have been innovating products so that today we are at this stage where a lot of competition is is away. So the same innovation we'll do so that in the next few years we are in that always ahead of the curve.
If given an option, then what you will pick for higher volume or higher margin?
Higher margin, obviously. The volume today is not a challenge for us. So volume, if you look at our oil business, around 3-4 years ago, we actually cut down a lot of volumes to improve the per unit margin. So if you see volume growth, take a 5-year CAGR for oil business, it will be flat. But the quality of our customers has gone up.
Do you have EBITDA breakup between the three divisions?
EBITDA for conductors is already there in this presentation, about 44,000. There in our investor presentation, corporate profile, everywhere is there. Earnings call update is there.
What's the plan with Europe? Because US has an import duty, right? What about Europe?
Europe also, there is a approval that is needed. We have applied for that thing, and we feel that the renewables will be a very big market in the Europe.
What's the current exposure?
Current
exposure to Europe? I mean, revenue for exports.
Europe, do you have it really?
How do you expect it to change? I mean, you just said you applied for something.
Yeah, so we expect that the renewables, solar and cables would be a very big push there. So already we are seeing that companies wanted to they are importing a lot of solar panels. So once they do that thing, then the wiring and those things will happen. So Europe will be a very big market when it comes to use of renewables, solar and cables.
And are we competitive?
Yeah.
And what's about China? How is that?
So
exports from China,
I believe China exports may continue, but we will also be competitive there because their requirements will be as huge, because they want to get into this renewables. So requirements will be there. So even if China is there, we believe that we will also be there. So we are also already getting, we are already supplying cables to Europe, but so that we feel will continue and it will actually grow.
What's the price difference between the Indian and the Chinese player as of now from Europe landed cost?
So there are so many types of cable, it's very difficult. There is no thumb rule there. We can't put that in. But we feel that we are as competitive as the Chinese.
So you can actually match the price.
Should be able to match. Not so much.
You are into optical fiber anyway.
Yeah.
So what is the outlook of?
So currently we are just about 200 crores there.
Okay.
But in terms of revenue, but that's an opportunity we see very strong in coming years, because with all this 5G, the data centers coming up and now the network connectivity increasing, that's a very big opportunity we see going forward. So there's a separate team who looks after that, where they want to grow that vertical, and then we feel that that will be a business. We have to gradually climb the ladder there.
But there are too many competitors in this space, like Polycab, KEI. So
they're not in OFC. They are there in the power cable. OFC are Sterlite technology, HFCL, and those types of.
Polycab is there. Yeah, very small portion is coming.
Competition will be there everywhere. But what's going to happen in the cable market is that the market is going to be huge. We don't have to really worry about competition. It's really fight for everybody because the market is going to be huge.
So is that synergistic to your power business to get into telecom cables?
So what we have unique synergy is that we can also make a hybrid cable, which is the OFC and which only we can do because we are into the copper and aluminum business. Also the copper and this is something that hybrid cable is something that we can do and create a separate market. Sorry?
Use case
क्या?
Use case.
Use case conductivity and the data दोनों हो जाए.
Same as me.
So even today, if we have this, OPGW, which does, for every this, towers you see, where we need an earthing चाहिए रहता है इसमें. तो earthing में it actually brings it on the ground. So there we also do an optical fibers, so that data transmission and earthing both serves together. Same thing can happen here also. So it's a hybrid cable.
Think of margin by segment.
By which segment?
By each segment, how
margin.
So we actually talk about the total margin itself, but directionally I can tell you that some of these elastomeric cables will have a higher margin than the power cable. Export will have a higher margin than the domestic business. Then transformer oil will have a better margin than some of the other white oils there. But overall, it's a
transformer oil should be mid-teen kind of margin if they are on the higher side.
Yeah, as I said, will be on a per kiloliter basis. Percentage will not give a right figure. About 5,000 to 6,000 per kl, that's the range. And oil, what happens that cannot be hedged. You will see different margin in different quarters. You need to actually see a 12-monthly number to see what is the picture. Because if the oil price is high and if you are stuck with low inventory, the margin will be very high. If the oil price falls and you are stuck with high inventory, margins come down.
Can you de-risk the inventory part?
There is no way to de-risk because it cannot be hedged. So the only way to de-risk is just to keep unlimited inventory.
You sell on spot only or you can do long-term contracts?
No, it's on spot.
It's a spot market.
Sell is on spot.
Both spot and both transformer oils and
oil.
Everything is a spot market.
Yeah, the only way to de-risk is to keep inventory at the minimum. So which we do about 2 months. And see, this does not affect because if you look at 12-month period, it neutralizes actually. So if you just look at last year, first quarter was 9,700 per kiloliter. Then it went to 4,500 in quarter 2. Then it went to 1,600 in quarter 3. Then it came back to 4,500. So somewhere you will get a very high margin, somewhere you will get low, and then it just gets averaged up.
How confident are we of maintaining this 25,000 plus mark EBITDA?
In conductors? Conductors, yeah, we are very confident because the product mix has changed. The conventional product which are there, we have this HTLS, we have the OPGW, we have the copper. The product mix has changed. So 25,000 is a base thing that we can do. We can do plus that, as I said, all the margin we are saying is 20,000 plus tailwinds. If you see first quarter, we are close to about 38,000. That tailwinds will come because all this macro geopolitical thing that we talked about, those would favor us. But 25,000, the reason why it has come is just because premiumization of the product. If you look at our transformation journey of conductors that we have elaborated in the investor presentation, even in 2014, we were largely conventional conductors. And now the share of premium has gone up as high as 40%. So that's the strategy that was done during that time, because of which we are reaping the benefits currently. Okay, thank you so much. You want me to give you a brief background about Apar or familiar with the company as such?
Maybe
brief background.
But we are
Sure.
What's been happening and increase on next 2-3 years?
Sure. So as you know, Apar, we are into the business of manufacturing products that caters to electricity transmission. About 85% of our products goes into this particular transmission business. We have 3 divisions broadly: conductors, cables, and oils. And total turnover last year was about 14,000 crore. 50% came from conductors, about 22% came from cable, and about 30% came from oil. We have manufacturing facilities in Mumbai, Silvassa, in Sharjah, Orissa, as well as in Gujarat. About 50% of our products we are exporting, and that's an initiative that we took to expand our export proportion. 50% of the products we export. A lot of macro environment economic factors which have been conducive to our business in the very recent last 1 to 2 years, and some of the reasons are due to which you are actually seeing a good results in FY23. So there's a lot of thrust on renewables when it comes to both Indian market and the global market. The countries and the nations are looking at increasing the renewables spends and want to push towards those renewables. So a lot of infrastructure spending is happening in some of the developed countries, developing countries. A lot of transmission lines are being relayed, which actually throws up opportunities for the power industry. The Indian government is also, there's a lot of schemes coming up where things like RDSS schemes are there. Our rail network infrastructure is improving. A lot of metro trains, fast speed trains, are there. So in the Indian government there's a lot of initiative to improve your infrastructure requirements that is helping us from a macro point of view. In addition to that, there are a lot of these geopolitical situations which are favorable currently. This China plus one is clearly is a very advantageous position for us. You have the Russia-Ukraine war happening. Europe is seeking an alternative to energy. A lot of push towards renewables. Those are beneficial to us. And in the midst of all these things, even within Apar, there's a lot of strategic improvements, or I would say pivots that has happened, which has led to this performance. For instance, a lot of focus within Apar has been on premiumizing our product portfolio. So if you look at our conductor division, the profitability per metric ton has increased considerably from what it used to be 3 years ago, which is the result of purely premiumizing the product portfolio.
Still you very lower.
Yeah, so I'll come to that. Yeah. I'll come to that thing. So that's a purely reason of premiumizing the portfolio.
What do you mean by premiumization?
So what we mean by premiumization is that if you go back 7-8 years before, the conductors that we are actually selling was largely conventional conductors, which is your ACSR type conductors, which are not so difficult to make, which can be done by a lot of unorganized players also, and it had limited current carrying capacity. But if you look at places in cities, in urban areas where the requirement of electricity is more, you cannot carry high transmission from the conventional conductors, which means that if in Mumbai you want more electric current inside Mumbai, the supply of electricity into the city has to be more. So either you create a parallel infrastructure, which means that either you create new towers, new right of way, which is practically is difficult, or in the existing towers you have to remove that conductor and put a high transmission conductors. So this high transmission conductors is what we call as a premium conductors, because it has in the same tower you can actually transmit a much high electricity within the same infrastructure which is there. So it's not that easy, as I said, because your conductor has to be designed so that there is no pressure on the tower. So very high transmission of electricity flowing within the same tower infrastructure, and the tower should be able to withstand that high transmission, because these towers are all built for the conventional conductors. That's where the specifications and the design, the technical know-how of it actually is so relevant. And we have been pioneering this HTLS, which is premium conductors, which is able to transmit such a high current within the same towers, we are able to pioneer that.
In a layman words, what does that?
In the layman, it is just that very high voltage of current
changes in that.
It's more copper content.
More copper.
The formulation bill of metal completely is different. So we have a composite core which is inside, which actually holds this thing. But the formulation bill of metal is completely different than the conventional conductors.
Oh.
And you need actually very different equipment to actually put the conductors there, because these conductors can go over railway lines or mountainous terrains. So it's not difficult for anybody just to put over there.
Yeah.
Because everywhere the transmission will happen at a fast speed. The towers will be able to withstand that. So it needs all this sophisticated equipments to kind of reconduct the thing. Also in places like Mumbai, you can't have power outages. So if the line is there, typically is done over live bias.
Right.
So that's the speciality of this.
And the cost and the selling price, how does it differ?
It is it's a premium product, and the margin that you see increasing is because of this premiumness that it comes.
It's a covered conductor, right?
No, it's not covered. This one is not covered.
You have a covered conductor.
That's a different product on innovation. It's a covered conductor, but this one STLS is not covered.
This STLS thing, so in India, how much demand is it? Who are demanding it now?
So all the transmission companies, we are selling to all transmission companies, and especially it is used more in urban cities where the concentration of the demand is more and supply is.
So I'm saying, suppose 100 rupee worth of tendering happens for conductors. How much of that happens for the...
So now it is increasing. So this thing we have started way back in 2014, and the implementation of this product started way back in mid 2000. That's where the management of Apar decided that the conventional conductors cannot be the game of the future, because it's getting too commoditized. Margins are going to be less. It's going to be a price game. Unless there is a differentiation, you will never be able to overtake the market. And therefore, the work on this STLS started way back in mid 2000, and finally by 2014 we are able to deliver that product, and till there, even 2014-2019, the volumes were less. Now we are seeing a Sterlite Power. We are the only companies. So
is there entry barrier in terms of
there is no the entry barriers in terms of the capability to manufacture. Because this, as I said, if you see here, there's a slide which is there in our corporate presentation. It talks about the competitive advantage of conductor in the premium product. If you see, this technology and know-how involved in the product design is actually a barrier of entry to competition. So it's not so easy for small player to replicate this product. This talks about special stringing mechanism with equipment to protect the core, because you despite the high transmission, you don't want the conductor to sag down, because there will be vehicular movements, people going there. You still want the conductors on top, right on top there, despite the high transmission. The customers look at life cycle cost. They don't look at reducing cost there. So there's a lot of pre-specifications for the purchase there.
So what kind of transmission change you are doing? Capacity 400 to 700?
765 also we do, up to 765.
Which is conventionally a 400 kVA kind of lamp. We're converting it to 765. And then in terms of urban cities, what percentage you covered, or what is the potential, or
so potentially is there. So this has just been started a few years ago. It is increasing, but now if you look at the pan India potential will be
versus on urban cities, right?
Will be urban. Slowly it will get into.
For example, Bombay city.
Yes.
25% of the lines are converted, or 30%. What
I don't have the exact number, but if you see the number, this currently we are doing it, in this. That is coming from Kalwa, there is a substation there where this lines are getting converted. So it's an ongoing process there. I don't have the exact number of how much you have completed in Mumbai and how much the potential, but this is something would be there, because you see that the demand of electricity is going to increase. So many things happening, work from home is happening, the standard of living is improving. But your right of way, that your towers infrastructure is still there. It's the old infrastructure there. So how to get more power, is
Can we say that at the cost of conductors, actually the transmission companies are
able to save on the tower cost?
Yes.
Because otherwise they would have actually had to set up
new towers.
New towers and also the whole right of way.
Which is not practically possible.
Yeah.
So no, that's where this advantage is.
So competition कितने दिन में आएगा? Suppose any new guy who is trying to do it.
So as I said, इसमें क्या है ना? इसमें it's not only the product, it's actually the also the EPC work which is involved. इसमें actually we are doing like a mini EPC work.
आप तो मतलब पूरा contract लेते हो?
Only for the tower reconductoring. Tower बनाते नहीं.
Tower बनाने का नहीं.
But conductoring, reconductoring करने का पूरा काम हम कर.
So that means that. What is it? So why can't competition come in there?
Because as I said, no, this advantages. So no, it is like the people and the manpower and the gangs to do a live wire reconductoring is not so simple. Railway station के ऊपर जाएगा, mountain के ऊपर रहेगा. You have to do this high transmission over there. It's not a simple thing for any unorganized player to do. Of course, big companies like Sterlite do that, and maybe some few more companies can come in future.
तो website में video डालना चाहिए. समझेगा.
Right.
क्या complex काम है.
Correct. So there could be few companies coming, but if you look at the conventional conductor, उसमें तो पूरा bloodbath है margins में. वैसा type will not be there. There could be few more companies, a handful of competition over there.
Because per line kilometer basis, if you were to compare it with normal conductor vis-a-vis power conductor, what will be the value difference?
So the value difference actually is translated into the EBITDA difference. Now, if a very ballpark, if you see 3-4 years before, we are about 8 to 10,000 per metric ton. Abhi, we're talking about 35,000, 40,000 metric ton. So this entire increase in FY23 is largely come from premiumization and globalization, which is what I was talking, like macro, like geopolitical. Within Apar, we have been moving towards premiumization. Within Apar, we have been moving towards globalization. Within Apar, we have been going through innovation. So a combination of what is happening within Apar plus macroeconomic plus geopolitical is all actually seen in this FY23 results.
A lot of people are not buying from China.
China plus one. So China plus one is actually benefiting.
Apar का जो EPC player, I think it's that you win because of that also.
Yeah. Correct.
You have to command your price there.
Correct. Yes.
Sir, are there any foreign competitors here, or I'm again layman question, like what stops someone from importing from another player and doing the HVC separately?
So India में तो there's no this foreign companies which are not there also, actually banned.
It's banned.
Yeah. So like how India can, in some countries where India is not able to export, from those countries India can't do. That's how it is.
Sir, if I look at the 2020 presentation of 2021, our premium product contribution was also at 40% at that point, but EBITDA per ton was roughly 12,000-13,000.
Correct.
Now also the premium product contribution is just 40 to 45%, but EBITDA per ton has been improved to 55,000.
Yeah.
So is there any role wherein because of the higher realization, because in the China plus one or maybe the higher demand which we are already witnessing across the different markets, that has given this alpha, and is that sustainable?
So two things that has happened is that one, so premiumization has happened, and second is that our export mix has also gone up. So in FY23 what has happened is that not only the premium products being sold in India as it used to happen earlier, but the non-premium products we are actually exporting, which earlier used to be sold in the domestic market. The non-premium products in the domestic market was with the lowest margin. So what we are doing, the non-premium products we are exporting, and the same non-premium products exporting is getting much higher margin because the customers don't only look at price there in export market, unlike in Indian market which is a price game. There they look at price, they look at quality, reliability, durability, companies having risk appetite. Also they are actually seeing. Plus there was a lot of COVID pent up demand coming. People also wanting to fill up their warehouses. There are so many reasons that has actually came in FY23. Some of it may not continue. Like COVID pent up demand may not continue. Your people paying a higher price to fill up their warehouses may not continue. But some of the other things like the export opportunities, the demand going up there, China plus one thing, those are something that will continue.
So this non-premium product is roughly 65%
of the overall revenue?
About premium would be about 45%, 55%.
And export, how much we are exporting? This non-premium
45 to 50% export.
Everything is non-premium.
Yeah, export largely is non. Out of export, about 85-90% would be non-premium.
Okay, and what is the delta we are getting right now in the non-premium?
That's really difficult because we don't have an apple-to-apple comparison. All the products are different. All the products are made to order. So you cannot compare this margin versus that much. How much export will get, how much domestic will get. As I said, last year was also a reason where people wanting to fill up their warehouse. There were supply chain inefficiencies. Freight costs were off the roof. It got stabilized. So it's very difficult just to put a comparison across.
And this non-premium product we are exporting to which market majorly?
We are exporting to US is there, Australia, Africa, many countries.
So because of the China shutdown, was there any incremental benefit that came to us in the export business? And now the China is opening up.
China shut down, no, but China plus one has the impact because China plus one, the US wants to have an alternative vendor other than China. So in US, the import duty from Chinese product is some 15-20% more for certain categories of product as compared to import from India.
Okay.
So that's a clear China plus one benefit we have.
And that import duty will last till,
so now as long as China plus one is there,
okay.
US-China tension, and US-China tension is where there will be there, and as of now we are seeing it will be there. Which one? The duty change happened very post-COVID. Till that, Chinese were dominant. So this is what we are saying. The geopolitical thing on all this macro is actually favoring us. Unlike many places where all this geopolitical would be there, when China is shut down, it's all favoring us. Plus, there's so much focus on renewables, so much focus on public transportation. So stuff is all giving way for our electricity this thing.
So now just on the renewables, can you just detail how renewable, shift to renewable itself is spurring demand for conductors? Because already there will be some, infra that is already set up for the conventional electricity.
So renewables, what happens, so this, you will need a different infrastructure because take an example where you can get solar power where the sun is there, where you get wind where no wind is there. From that place to the place of distribution place will be common, but from that place to this place, if you have to do it, you need a special type of cables inside the wind turbine which rotates there, the torsion kind of cables. And then there's a tower cables which brings the wind from there to the ground. Then from there it goes to, let's say, a junction box. From there it goes to an inverter. It goes to a transformer. Just let me answer.
So that is the related thing I'm asking. Is there more cable intensity?
Absolutely more. वही मैं explain कर रहा हूँ कि इतना सारा जो है, it's all different kind of cables. कहीं पर string cables है, कहीं पर your low voltage cables है there, कहीं पर in also you need a conductor also because if you have to transmit, let's say this wind power is in a particular place in a country, from there to get back to a substation, you may need a conductor also or maybe underground cable also. And then from there again you need a transformer to step up, step down voltage. Then again you have to go back to the place of distribution. So intensity of this will be huge, very different and very high as compared to thermal. Similarly wind, there could be offshore wind, there could be onshore wind. See the application from the place of generation to place of distribution, all our products will be there. Cable bhi rahega, conductor bhi rahega, and also transformer oil bhi rahega. Because transformer will be needed at every step up, step down stage. And in every transformer, you need transformer.
So essentially, the entire infra needs to be recreated.
That's where we see this renewable push application of products.
And just on the renewable section, this is for the solar. How does it work when nuclear is possible? Is the cable intensity, is the intensity higher or lower?
Yeah, but I'm not exactly aware of this thing. But that's also one form of your renewables. It also comes under the renewable.
So India is already moving to the premium conductors. So why US and Australia and other countries are still, importing the?
They can see when you're designing a new line, you can design that line with your conventional conductors as well as high efficiency conductors. Okay. If already a line is there with your standard conventional conductors, you have put some 40-50 years ago, time nobody had thought some high transmission would be needed. That line is designed. That towers are designed for the conventional conductors. Now, उसमें you cannot put this HTLS without the same HTLS. Then you have to do all the design thing. But if you have to put up a new line, you can design the way you need.
So here in US and Australia right now the demand is coming from the
new lines. Whenever they want to change the lines, it could be there. It could also be the demand.
So what is the new line infrastructure that is still to be incurred over the next 2-3 years in those countries?
There is no figure as such. We don't have an exact figure how much they are going to do all that thing. Maybe there in some public forum, but we don't have the exact number of how much they are going to do.
Commodity तो cover कर दे order के पीछे
hedging हाँ पूरा back to back hedging complete back to back
इसमें कोई वो benefit नहीं है
वो नहीं करते we don't keep any aluminum and copper risk open the moment there is an order वो उसको back to back hedge कर लेते so whether it's a gain or a loss
inventory gain loss तो भी
conductor और cable में नहीं होते वो inventory gain oil में रहते because it cannot be hedged.
So what we heard in the con calls of the other transformer companies, like in the US, there is the refurbishment and the new, I think the new capacity also coming from. That's why the transport demand has been increased, right? So is there anything in the conductor side where the refurbishment of the old capacity will be required?
Transmission करेगा तो conductor would be needed.
But that is ये तो new वाला है ना. तो पुराना वाला refurbishment हो सकता है
even old वाला भी रहेगा तो you need a conventional conductor anyway transmission line
जैसे renewal capacity अगर वहाँ पे बढ़ रहा है then you will be requiring the premium conductors or the old conductors will be sufficient?
Both depending on application. You will need you can even work with the standard conductors also there because you just need to transmit there so you can design it with the standard conductors also. You need standard and transmission, so any transmission line will need that conductors, transformers and different type of cable depending on what exactly is the requirement.
Coming to margins, you will tell. Why are you guiding?
हाँ तो margins में ऐसा है so margins में ऐसा है कि the journey from 10,000 to whatever 60,000 is a combination of so many things or 44,000 that some we even touch 55,000. It's a combination of premiumization. It's a combination of export mix going up. It's also, as I said, the combination of post-COVID pent-up demand tha. And because of this freight issue that we saw in the last year, people were just wanting to fill up warehouses at whatever cost. They were not getting material. Even the freight cost was 10 times higher. They wanted to have the material in their warehouse than having a lead time of 60 days. Containers availability was not there. So last year was a mix of so many things because of which the customers were willing to pay a very high price for the material in hand. Now what we are seeing is that some of these things may not continue in future. Like we freight rates have been normalized ho gaya. COVID ka pent up demand is all over. So those two benefits we may not get. Also we had also locked in prices, assuming a fixed price at freight rates and the freight rates came down, so we got a benefit. So ye sab cheez may disappear. That's why what margins of 55,000, 48,000 that had this combination of that. But what can continue is this macro, because of which this demand would be there, renewable car demand rahega, China plus one would be there, your geopolitical tensions could be there. So the overall infrastructure spending would be there. So the macro demand would be there, which would be driving growth and would also be driving a better prices would be there. But some of things may go away, and that's the reason we are saying that if you want to still put a number, we'll get 25,000 plus tailwind. So we are not saying it will be 25,000. We are saying 25,000. So मेरा पूरा वो premiumization का वजह से आ गया, which is also HTLS, OPGW, copper करने के बाद 8,000 जो था 3 साल पहले वो 25,000 आ गया. Plus I will get some tailwinds. अब ये कितना आएगा, कैसा आएगा, it will depend on that particular situation. So
volume can go down. No.
In volume we are looking at
because people are feeling so much.
So 1-2 quarters momentarily that could be there, but we are looking for about 10% growth in volume. 10%
based on your feedback, what you get from your
we are looking at about 10% growth year-on-year volume growth, and margins would be about 25,000 as I said plus tailwinds. I mean where it will settle, it will really depend on execution of the projects there, the product mix that is coming and all those.
So 50-60 is not.
That उसपे a lot of abnormal था, so that looks a very abnormal number, but it would be somewhere 25 and above.
This one understand 10% is conductors.
Sorry,
10% is overall company growth.
Conductor, only conductor.
That is also domestic plus export.
Plus export. Pura conductor volume would be about 10%.
इसमें domestic export का क्या होगा?
नहीं लग रहा है अभी।
हमने स्टरलाइट पावर से भी we touched base with the IR team. तो इन लोगों का तो कंडक्टर का EBITDA per ton is मोटा मोटी 40,000, 35-40,000. And we are already doing 55,000. So what is the
उनका देखिए I don't know product mix may be different than our product mix because all this will depend on the product mix. Even I think they are also doing a lot of this EPC related work. So whether the product profile and this is same or not, we will have to see. They are doing large scale EPC also. So it will depend on apple to apple compare करने का, then only you know how it is.
So that is why actually the realization difference between India and foreign countries becomes important because premium conductor was anyway I think it was 40%, now it is 50-55%. So the premium part is not that much of a change for the difference in EBITDA to be there. Largely it has to be the realization difference.
No, it has to be both. Even premium conductors also, it has actually improved because when you see year on year we have also been improving the productivity, efficiency of these. It has also improved on the margins. So, a lot of plant debottlenecking we have done, which has also resulted in improving margins. So that also has a role to play. Because
on the non-premium side, would the realization be 50% higher for export markets, the non-premium side?
Percentage wise, as I said, it's difficult to put that number. It will be definitely high, but percentage it will depend on various things, like what order it is, what time they need, the urgency they need. So it can depend.
You mentioned on the non-US side some competition coming from Chinese on the last call.
We are seeing that. Chinese are active. Because in US, of course, there's a lot of barrier in terms of differential. But non-Chinese, non-US, they are trying to make a lot of inroads. But what we also see is that your volume growth should be there because there's so much spending there. But they will be active in the non-US.
In non-US is 30% of their business.
Yeah. About exports,
conductors and cables.
So in cables, out of exports, it will be about 65% will be US, 65-70% US. The conductors, if I'm not wrong, about 40-50% of US.
Capacity wise, now we are increasing capacity.
We are increasing capacity. The capex plan is about 400 crores for the next 12 to 18 months.
Conductor is going to?
Conductors will be 25%, 100 odd crores. Cables where we will spend about 2/3.
Conductor capacity कितना हो रहा है?
Conductor में already we are just about 2 lakhs, 2.1 lakhs. That will go to about 2.5 plus per jaayega. But capacity will not be a constraint because we will always keep on debottlenecking, investing ahead of the time. Even as of now, we have sufficient capacity available for FY20.
Is the Chinese competition that you called out, is it severe to be looked at or not?
So Chinese competition, it would be there, but currently in US we don't have that impact.
No, just on the non-US part. I mean, is it like you are required to the profitability that the profit business that you were quoting earlier, let's say 6 months back or a year back? While quoting itself, while quoting, while billing, what is the change in that profit metrics?
So yes, they are quoting very aggressively because they want to ensure and maintain that particular market there. So they are quite competitive in terms of quoting it in the non-US.
Which all countries, China, they don't prefer? Which major regions?
I think it's
EPC contractor China का माल नहीं ले.
It's अभी क्या हो रहा है ना? China is actually gradually coming down. It's not a switch off, switch on the knee. Without China तो होगा नहीं, but gradually it is actually coming down. US is very clear. Other countries, Europe में भी ऐसा we are not seeing that thing. So because like US we are not seeing that strong negative.
So your export you don't give region wise breakup.
Yeah.
You give?
No, we don't give that. But we've been exporting to Europe also.
US should be what portion of your export?
US, as I said, out of the cable export, 65% would be US. And conductor, as I said, out of the total export, 40-50% would be US.
Could you just talk about your B2C side of the cables, how that has been doing, and what are our plans?
So this B2C, we actually introduced a very differentiated product there in B2C cable, which is E-beam E-beam wires. And we are the only player in the house wire segment to have this E-beam. What it actually does is that it carries 50% more current than other wires. So it's more melt resistant. It's short circuit resistance, and we claim it has about 50-year life of the product. So in terms of competition, also they don't have this technology. So as compared to competition, we have this USP, and with that USP, we are promoting this product. We've hired Sonu Sood as a brand ambassador. We went on air for the first time in the Women's Premier League over there. We were active in just about 2 states even in FY22. Now we've already gone to 13 states, plan to go to another 4 more states. Our distribution and retail count has increased, and the way we are promoting this is actually by showing these demos to all these electrician meets and these nukkad meets, which is what you see here. The number of demos have actually gone up from 6,000 to 35,000. Electrician meet has gone from 8 to 9 times 500 to 3,000. With that, if people are able to see the difference between Anushakti cable and other cable, how it has 50% more current carrying capacity, then the success rate of people buying this is much higher. Because once you put inside the wall, then you don't want to again break and everything rewire. And if it is the requirement of electricity in the house is increasing, so you need much more current carrying capacity. So that's the USP that we have. It's currently about 175 odd crores in FY23. We plan to make it to about 500 crores by FY26. And the channels and the distribution, everything is continuously increasing.
And what makes you think that other cable players will not jump into this line?
They can do that, but they are already at a very significant number. We are the very small player here. The other companies are in already thousands of crores, which are there, and whether they would want to do or not want to do is we need to see. But
But if it's a big enough market, then I'm sure
it's the same market, but it's a different USP that we have.
That are you replacing the conventional wire? It tries to say that.
Yeah, it can. So it can be because
that would be the opportunity side.
It's a superior product, much superior. But as I said, competition can also come into that. But whether they would like to do, because if you're on small scale, then it's easier to do that thing. If you're already on a big scale and changing the product, so you need that manufacturing capacity. And this E-beam is not so easy to replicate that. It takes a lot of testing time, quality, and the lead time is much high. So whether competition will be able to do that or not for that large scale is a question.
So is this technology used in retail in some other country or something? Or
it's actually used in all the solar cables, and we were the first one to copy that for the house wire. So now if your solar radiation is there, you need that high current carrying capacity, and we are the first one to use it for the house wire business.
But then, is it safe enough to be used in?
It's more safe because it will carry 50% more current, so it will be more shock-proof, short circuit resistance. See, the short circuit happens when the insulation, which is this insulation, it goes off, and that's why short circuit happens. And if it takes more time for this insulation to go away, it's more safe. So with E-beam wires, it has 50% more capacity to absorb current before this insulation goes away.
What is the price difference?
It's about 2-3%, not more. But we are not now focusing on the price, we are focusing on increasing our reach, the awareness of the product. Because if people are not aware of this different product, then it will not penetrate.
Melt resistant means it will not melt.
काफी ज़्यादा टाइम लगेगा मेल्ट होने के बाद. तब तक at least you will come to know various things as compared to other way.
So in the conductors, for the premium products, we are classifying 4 conductors: HEC, copper conductor, OPGW, and CTC. HEC roughly contributes roughly 23%. So out of the 20% incrementally, what is the the revenue contribution of this field?
And approximately this copper would be about 15%, and rest could be OPGW and CTC and all.
तो उसमें से if I look at the FY23, तो उसमें से किसका revenue ज़्यादा contribute हुआ रहेगा incremental, because the changes in the product mix अगर कुछ delta आया.
All these three HTLS, OPGW and copper, all these three. Specifically, exactly numbers I don't have, but all three would have.
And copper conductor is mainly going to the railway. Okay. Is there any metric कि अगर रेलवे का इतना लाइन किलोमीटर इंस्टॉल होता है, then this many number of conductors will be installed?
Yeah, this ratio, there would be some metric, that conversion metric would be there. But one is railway electrification, other is all this, the fast train, bullet trains that will come. So that's an opportunity going forward.
And मोटा-मोटी EBITDA per ton would remain the same across the all four?
It will all be different, but the weighted average would be what I gave as a guidance. सबका EBITDA per ton अलग है.
Generally, is there a lag in terms of pass-through of copper prices, etc.?
No, because we hedge it. We run a full 100% hedge book.
So whenever you get the order,
whenever you get an order, we hedge it. So that price is fixed. The delivery can happen after 8 months, 9 months, whenever. But this is, the price is fixed.
Back-to-back hedge.
There is no risk on metal we take. We can't afford to take.
Revenue of 3,263 crores in cable. It's been more of B2B only.
Except only 175 crore. Everything else is
B2B. Industry जो भी end demand में आ रहा है.
Yeah.
So how do you see growth? I mean, over the medium term, like in the next 4 or 5 years?
The same thing. The conductors we look at about 10% volume. Cables may be looking about 25 to 30%. Oil may about 5%. What we look at the medium term.
Any other line of business promoter supply?
यही है काफी so much thing to be done here. नहीं इस साइड पे इसमें क्या होगा ना within each thing the application of cables में बहुत है like for example cable I tell you we say give it for solar में है wind में है railways में है shipping में है defense है mining है automotive है then there are some power का different cables है OFC है house wires are there. And I'm sure I'm missing out 5-6 other cables. The opportunity is so immense that there's so much potential. Conductors also, that what we talk about conventional is just one word, but there are some 100 types of conventional conductors. One ACSR, one triple AC, one AL59, and within that there will be so many variants. And this is a core there, the electricity transmission is a core. And if you see the macro and geopolitical, it's all talking about that. When the core is so strong, then why you want to?
Suddenly, इतना पैसा बनने लगा कुछ एक को.
Good, no? We'll put it back in the business.
So, how much percentage of your revenue comes from government?
ये government I tell you, government में
tendering वाला है.
हाँ, तो if you see this is one slide that is there in the corporate presentation also. Government is largely transmission companies and this electricity distribution board. So. Maybe 5, 6, 12, 13%. Out of it, 12% is transmission companies. Government का सब tender ही होता है, but distribution board is this only. That difficult board which is there, that is about 1.6%. Transmission companies are they are very different. People earlier used to confuse us with distribution board, but if you see this distribution board, we just said about 1.6%. Hardly any.
Sir, top 5 sectors which are growing at a double-digit rate according to you. Like in cables, you talked about a couple of sectors of the end segment, but currently top 5 sectors which are growing.
You see, solar hai, renewables hai, solar wind is growing at a fast pace. Defense you will see growing at a fast pace. Then auto cables would be there. There are so many wiring needed inside the vehicles. Electric vehicles के लिए जो cable लगेगा, that would be there. Buses, electric buses के लिए जो we supply to electric buses also. JBM Auto we supply, Apar we supply. For all the places where we see push happen.
Electric vehicle, they say it requires 3 times the.
So electric there is some wire network in the charging station. For charging station to vehicle there could be one thing, and then inside the vehicle is one.
Inside the vehicle.
So inside the vehicle we multiple wire we are supplying there. Buses, electric buses we supply. Vande Bharat trains we supplied. Most of the cables in Vande Bharat is from Apar.
Just to frame this question differently, which are the top 5 sectors which are contributing to cable in terms of revenue?
As I said, these renewables.
In growth and
and exports. The two things in India, if you see, renewables are there, railways are there, and defense sector. If you look at export, is complete, your new markets like US and where the opportunity is immense and we have never tapped it earlier. US, we were practically in cables, we were not there till the first half of FY22, and this increase that you are seeing is largely because US we are able to tap that market.
That is largely through distributors?
Distributors and to utility companies, EPC.
So much are not available, EPC carriers, the shortage, huge demand for some. So, अपना oil में भी फिर तो जितना लगेगा उतना तो अपना भी requirement पड़ेगा.
Yes. So oil कैसा होता है ना, ट्रांसफार्मर का लास्ट स्टेज में ये होता है, ट्रांसफार्मर कॉस्ट इज वेरी ह्यूज एंड ऑयल इज यूज्ड एट द लास्ट स्टेज. सो जब वो बनने के बाद सब होते हैं तब ऑयल का.
So over a period of next 3-4 years, then the demand will go.
Because transformer is linear to your this transmission lines and various. ये जैसा बढ़ेगा, transformer demand will also go up, and therefore oil का demand बढ़ेगा. Because conductor, cable and transformer oil, all three are एक ही ट्रेंड. एक बढ़ेगा तो आई एम श्योर अदर वन.
The question of medium-term growth. You spoke about next 1 year. 3 to 5
about
years.
the same similar we see. See, because I'll tell you, this growth, is not a India specific thing or one particular country specific thing, nor it is a particular year specific thing. I mean, renewable, they have some target to do something by 2070, 2030. It's going to be a decade-long opportunity. The second thing is that it cannot be done by one country. Across the globe, people are doing. So what we are going to witness in this decade is not a nation-specific thing or a year-specific. It's going to be pan-global and over the decade. Of course, thought about temporary, there could always be this talking, this thing. But the long term looks very good. And therefore you see across the industry, people are all spending capital. It's not us. Everywhere you see the capex spending happening. So it's a global phenomenon over the decades.
So conductors में ऐसा anything new you are seeing in this year versus the last year? ऐसा कुछ अगर development?
No, I think a lot of it has been happening in the last year in terms of getting into exports. So we just want to continue that momentum. काफी कुछ चीज 2 साल से जो हुआ है, we just want to maintain that thing.
Momentum same ही है last year जैसे.
But yeah, of course, 1-2 quarter में there could be de-inventorizing and everything. Apart from that, we would like to just maintain that position.
So and as the medium term, like on the margin front, are there levels to improve it further?
As of now, we are guiding these numbers, but as we go further, we will come to know how it is. As of this number, we look at for the medium term. Then at some point in time, we will get scale efficiencies.
So तो अभी 4 जो segment है उसमें कौन सा segment में you are seeing the highest inquiry? Inquiry in terms of the order flows. मतलब order prospect के हिसाब से कौन सा segment you are seeing the
cable looks the most fastest because cable का market is huge and application is high. With conductors you cannot put here there, overhead cables you can put everywhere. Market both huge. Cable and so if you see 25% growth we are guiding in the cable. Now it's already FY21 में 1200 crore, FY22 में 2000 crore, FY23 3200. We already added 1000 crores every year. Now we are still guiding at 25%.
Underground conduct, these we call as conductors or
anything on the ground, and this is cable. Cable is nothing, conductor plus an insulation. So conductors can only be overhead. People should not touch them.
Or live.
Or live रहते हो, touch नहीं कर सकते. Anything with a insulation, underground, your vicinity is all cable.
So margin यही रहेगा ना 10-11% cables.
That's what we are guiding 10 to 12 over a 12 month.
Operating leverage आ सकते हैं इसमें.
We will get scale और बढ़ेगा तो we likely to get. But as of now we have to see that. We तो वो 12 month period में 10 to 12% is the number we are getting.
रिस्क क्या लगता है?
रिस्क तो ज़्यादा लग नहीं रहा, कम है, बट अपॉर्चुनिटी ज़्यादा है इसमें. तो रिस्क like lot of these things we are also thinking internally that things like China plus one will not be opposite to नहीं होगा. The kind of variation that we have in the product profile, it is we are not concentrated and limited to one particular thing. The products where we are, उसमें तो a lot of trust is there. Solar, wind में तो कितना trust है. So looks limited at least at this stage. Momentarily there could be all this de-inventorizing and all this thing. Long term looks robust.
So 530 crores cash at the to be used for capex or something?
It's also used for working capital. As you working capital and also maybe using for some part will go to capex. It's a collection that keeps on rotating in the business. Okay. Thank you so much.